record. Again, if you don't want it to be on the screen, do not turn your video on. You can share your questions on the chat. All right, so with that, I'm gonna admit one more person there. With that saying, well, happy lunch hour, everyone. And I hope you are all enjoying the spring breeze here. It's beautiful weather, beautiful weather. Beautiful sunshine out there, and we are really grateful of you choosing to spend this moment, like half an hour, with us today. So thank you so much for joining our discussion series. For those of you who are new in our series, welcome. And my name is Farah Naz Afaq. I'm the Recognition Counts Outreach and Marketing Coordinator at Seed Winnipeg. And I do have my colleague here, Jeff, who is the Recognition Counts Loan Coordinator at Seed Winnipeg. So Recognition Counts, at Recognition Counts, we help and support internationally educated professions by providing them financial consultation, as well as an opportunity to apply for a loan of up to $30,000 so they can get their credentials recognized and get a job in their field of expertise. So with that saying, if that is you, do please connect with either me or Jeff. We'll discuss further about the options you have there. All right, so we are going to discuss about lines of credit in this session. So if you have missed our participating our last few sessions, we have covered many different topics about credit and loans. Most of them are recorded on Seed Winnipeg Facebook page, so you can visit those links on recorded sessions on Seed Winnipeg page. Jeff may be able to pop that link on the chat, so you can also go to that link by just clicking those links that Jeff is going to share with you on Zoom. Again, the discussion series will be informative and interactive, where I will provide information I got from Financial Consumer Agency of Canada, and Jeff will share his perspective based on his previous work experience working at financial industries for many years. With that saying, we will be dedicating 5 minutes at the end of the session where we stop recording, so you can share, turn on your video however you feel comfortable, and ask your questions. So let's start off of our session by land acknowledgement. Seed respectfully acknowledges that we live and work on the territories and homeland of Indigenous peoples, and that the land and water sustain us. We respect the treaties as intended by Indigenous peoples. It is our responsibility to understand the truth of our history, be aware of the present, and work with Indigenous peoples to make positive changes for the future. So, once again, thank you for reflecting with us today. Last session, we discussed about credit card payments, and we did use a credit card payment calculator tool at that session. We discussed about what is a personal loan. We covered all the topic, how does it work, the process, and how do you apply, how do you pay. So we covered everything. In today's discussion series, we will be discussing about lines of credit. So if you are thinking of, is line of credit for me? Is this something I would like to apply for it? Do I want it to have on the side of my bank account? This session is going to help you out, and we will learn about advantages and disadvantages of lines of credit, types of lines of credit, and many more content there. Hopefully, we will be able to cover all the information in this session. If not, we will continue in our next session, where we have this series every first Wednesday of the month at 12 to 12:30. So, what is a line of credit? A line of credit is a type of loan that lets you borrow money up to a preset limit. So, you don't have to use the funds for a specific purpose, like some other loans are out there just specifically set for certain kind of purposes. But this is, once you apply, you're approved, you have that money, it's on the side of your account, you can take it out for any kind of purpose or needs you have. You can use it as little as you want or as much as you need it, up to the maximum limit that you are approved for. And also, you can pay it back anytime. I mean, the money that you owe, you can pay it back at any time you would like. Of course, there is a minimum payment or interest payment throughout the time that you borrowed the money, but for the full balance, you can pay it anytime. And you only have to pay interest on the money you borrowed during the period of the time that you are not able to cover the full balance payment. So, more about line of credit, about the credit limit and interest rate, and how do you, what you need to provide for the lender when you're applying. So, when you apply for a line of credit or any kind of loan, actually, a financial institution will ask you for a lot of personal information, and that is mainly because they wanted to confirm your identity, especially if you don't have any sort of product or you're a brand new client with that financial industry or financial institution. The lender will also look at your finances to make sure that you can repay your debt. They will look into your income. They will look at your current level of debt with other financial institutions. And that way they will figure out, okay, how much like of a loan you already are in a debt, and can you afford adding more debt on the already existing debt? Your credit report is important, and we have already covered this at the beginning of first few series, which is your basically your record of paying your bills on time or paying back money you borrowed, your basically entire credit history there. And some financial institutions usually they do require a minimum household income. It's between 35,000 to 50,000 in order to approve a line of credit. But again, these are an estimated number. It again depends on your financial situation, depends on how much money you are looking into borrow and have on your credit line of credit limit. So all these things really matters. But again, it also depends on your relationship that you have built with your financial institution and how many products already you have with them and many more aspects there. So when you're applying for a line of credit, you have the right to receive all the information needed, such as what is a line of credit, what is the interest rate, what is the payment process, how does line of credit really work, how do you take money out, how do you, which ways are the easiest ways to receive money out of your line of credit? Can you take cash out of it? And the terms and conditions, basically, it covers it at the financial advisor who are applying for you has to cover everything. But if you're applying on your own via on your online banking or online, then they are required to provide all the terms and conditions as in a PDF format that you can read them all. And I highly recommend you take your time and read through it. And if you're applying it with your financial advisor, it is very important to actually ask questions, ask all the questions you need, understand the conditions and the terms, everything in full, to make sure that this line of credit that you're applying and adding on the side of your accounts, this is really the what it meets your needs. It's helpful. It will put your financial situation in a better position. So how does an interest on a line of credit work? So usually the interest rate on a line of credit is variable interest rates, and this means it may go up or down over time. So in our last session that we had on April 5th, Jeff had an amazing explanation about interest rates, the variable interest rate and fixed rate. So if you have missed it, do please refer to the recorded session, and you will be able to get all the information from there. But basically, very briefly, if I can explain it, as a fixed interest rate will stay the same for the term of your loan, and a variable interest rate may increase or decrease over the term of your loan. So you pay interest on the money you borrowed from the day you withdrew from your line of credit until you pay the full balance back in full. And your credit score may affect the interest rate you will be paying on your line of credit. Actually, your credit score really tells the lenders how risky it is to lend you money. So usually, the higher your credit score, the lower the interest rate on your line of credit will be. And so, how can you actually, let's say you applied for it, you understood the terms and condition, you really would like to have a line of credit on the side of your bank accounts, um, and you have all the process done, you did all the process, and the money is on the side of your accounts. How can you take the money out? So the good thing about line of credit is that you can take it out with ATM, you can take it as a cash format, you can transfer between your accounts, um, or you can take it just maybe, I don't think you can take it out at the branch level because they will usually refer you to transfer between your line of credit account and checking account, and then they will be able to withdraw it for you. But there are many different ways that you can take it out, and you can pay it back at any time you are able to or you're interested to pay back. Of course, like there are the minimum payment again I've mentioned before. So what are the advantages and disadvantages? So before you apply for a line of credit, look into it in detail. Do your due diligence and see if lines of credit is really something that you would like to have, and you would like to apply for it. I personally, if I share my own personal interest, I do like to have a line of credit as an in case kind of scenario. So I make sure to not use it unless I face some sort of financial emergency situation. But I like to have it on the side of my bank in case I face some sort of difficulty, financial difficulty, and I need money right on the spot. So I don't have to go through the stress of applying for a line of credit and not knowing if I'll be approved or not. So it is on the side of my accounts, but I don't use it unless it is a very emergency purpose kind of thing. And there are a few good things about having a line of credit. So first of all, like it does not charge you any sort of fees or interest if you do not use the money. So once you, let's say you receive the line of credit for the limit of $30,000, it will go to the side of your accounts. It will stay as a $30,000. It's not going to charge you anything unless I go there and I take certain amount of money. And let's say I need 5,000 out of that. So I go and take 5,000 out of it. I will be charged interest just on that $5,000 that I just borrowed from my line of credit. The rest of $25,000 is still available there. And it's not going to charge me any sort of extra fees on that one. Um, and depending on the financial institution you use, you may be able to have an overdraft on your checking account transferred to your line of credit. And what is the advantage of that? The advantage is that it just connects your checking account with line of credit. So let's say your paycheck comes later than what you expected, and your payments are coming today. You don't have enough funds there. So when the payments are coming out of your checking account, the money will be automatically sent from your line of credit, so the payments will not bounce back. It will go through. So there won't be any NSF fee, which means a non-sufficient funds fee. There won't be any bounce back payment fee. And there won't be like a hiccup with your payments, like that will go to your credit history, all those headache that includes down the road. And also, sometimes like people like to have line of credit, and they because usually people when they face some sort of financial difficulties or challenges, they use their credit card. And keep in mind, regular credit card has a very high interest rate on it. So line of credit is a better way of like using the money where you will be paying a less interest rate. So that's another advantage. If you face some sort of financial difficulty and you really need money right on spot, you don't have to use your credit card with a very high interest rate. You can just use your line of credit there. But there are some disadvantages as well, of course, like first of all, like because it's so easy to access, it's basically on the side of my account. I can go and transfer it to my checking account and use it anytime I want, or I can go to the ATM and take a cash out of it anytime I want. It is very important that you have to pay attention on your spending, so you don't get into serious financial downfall if you don't control your spending. And because we talked about that the interest rate is a variable interest rate, that means that we don't know, like if the interest rate goes up and I have already borrowed money from my line of credit, then the interest rate, the payments that I will be doing for that portion that I borrowed, it will go up. So if I've used my entire 30,000 limit, I have to be paying the interest rate for that, the whole amount. So that's a downfall as well on that. So it's again, make sure you talk with your financial advisor and see the full term, learn the full terms and condition, and see if it's the best choice for you. For if it's going to put you in a better situation. So types of lines of credit. So when you're applying for a line of credit, it's again, make sure to choose the right kind of line of credit. You can apply for a secured and unsecured line of credit. And before applying on your own, again, it's a good idea to discuss about your financial needs with your financial advisor, who can give you an appropriate advice based on your circumstances. And the financial advisor will also let you know if the product is not appropriate for you, because it's their responsibility. They gotta give you the right kind of advice there. Again, make sure you do your research and ask questions to understand all the terms there. So secured line of credit, what is a secured line of credit? Secured line of credit is when you're applying for a secured line of credit, the financial institution or the lender will use your asset, whatever valuable you has, as a collateral for the line of credit. For example, the asset can be your car or your home. And if you don't pay back what you use from your line of credit, then the lender can take the possession of the asset that you put it as a collateral. The advantage is you may be able to receive a lower interest rate compared to unsecured interest rate. One of the examples for secured secured line of credit is a home equity line of credit, which your house is used as a collateral, and it usually has a higher credit limit and lower interest rate than other loans and lines of credit. But again, it depends on how much equity you have built. And again, this is another big topic that we can discuss about it in the future. We will have a specific session for equity line of credit in this future, where we can discuss about it in full details. Before I get into discussing about unsecured line of credit, Jeff, do you have anything to add on the secured line of credit there?
Yeah, absolutely. And I will just note that it's 12:26. So if we want to leave some time for questions, then we're approaching the end of our session. But yeah, a secured line of credit is the same as a home equity line of credit. They're both forms of security, but the home equity line of credit, or HELOC as it's sometimes known as, is specifically using your house as security, whereas a secured line of credit is probably secured with cash or a cash-like asset, like a guaranteed investment certificate or something like that. But you're exactly right. They both provide lower interest rates compared to unsecured lines of credit. And they also, sorry, I'm just distracted by the person that is notating things on our slideshow. Yeah, so they feature the lower interest rate and more flexible repayment compared to those other options.
Cool. Thank you very much, Jeff.